Last year, a new income tax deduction for qualified cash tips went into effect under the One Big Beautiful Bill Act, OBBBA. The break is scheduled to expire after 2028. In September 2025, the IRS released proposed regulations to provide guidance for taxpayers. The IRS has now published final regs that largely mirror the proposed regs, but also include some important clarifications and additions. What does the deduction cover? Under the OBBBA, individual taxpayers can claim a tax deduction, available to both itemizers and non-itemizers, for up to $25,000 in qualified tips. The deduction begins to phase out if your modified adjusted gross income, MAGI, exceeds $150,000 or $300,000 if you're married filing jointly. The deduction is completely phased out if your MAGI reaches $400,000 or $550,000 if you're a joint filer. Married taxpayers filing separately can't claim the tips deduction. Important: the $25,000 limit applies per tax return, so joint filers who both receive qualified tips can't claim two separate deductions. In addition, tips remain subject to federal payroll taxes and, where applicable, state income and payroll taxes. Qualified tips generally refers to tips paid in cash, or an equivalent medium, such as checks or credit and debit cards, to an individual in an occupation that customarily and regularly received tips on or before December 31, 2024. They must be paid voluntarily, without any consequence for non-payment, in an amount determined by the payer and without negotiation. Tips received in the course of a specified service, trade, or business are excluded. What's in the final regs? The final regs address several critical areas, including eligible occupations. The proposed regs identified 68 eligible occupations in 8 categories. The final regs expand the list to 71 occupations, adding visual artists, floral designers, and gas pump attendants, and tweaked some of the categories, ending up with beverage and food service, entertainment and events, hospitality and guest services, home services, personal appearance and wellness, recreation and instruction, and transportation and delivery. The final regs also expanded some of the proposed regs categories and clarified others. For example, they added app platform-based delivery person to the illustrative list for the goods delivery people occupation in the transportation and delivery category. The final regs also include 2 new examples dealing with payments to digital content creators. If customers' payments give them access to the content, the payments are treated as compensation for services provided. But if customers make voluntary payments after gaining access to the content, the payments are tips. Digital assets. The final regs state that digital assets aren't considered cash tips, for now. Thus, they're currently not eligible for the tips deduction. But the IRS has indicated it will consider the treatment of stablecoins in connection with the implementation of the Guiding and Establishing National Innovation for U.S. Stablecoins, GENIUS, Act, and any future legislation that modifies the characterization of digital assets. Voluntariness. Under the proposed regs, service charges, automatic gratuities, and any other mandatory amounts automatically added to a customer's bill by the vendor or establishment generally weren't considered voluntary, even if the amounts were subsequently distributed to employees. To be voluntary, the customer must be expressly provided an option to disregard or modify amounts added to a bill. The final regs retain this approach. However, they modify the language to make clear that a tip is voluntary if the customer has the option to reduce the tip amount to 0. So, tips made on POS systems with a tip slider that goes to 0, or an option for the customer to select Other and enter 0 are voluntary. Note: payments in excess of mandatory amounts are voluntary. Managers, supervisors. Under the final regs, tips received by a manager or supervisor via a voluntary or mandatory tip-sharing arrangement, such as a tip pool, aren't considered qualified tips. But tips received directly by supervisors or managers for services they provided in the course of duties performed in an eligible occupation, for example, performing the duties of waitstaff while the restaurant is crowded, are qualified tips if all other requirements are satisfied. Anti-abuse rules. To prevent the reclassification of income as qualified tips, under the proposed regs, a payment wasn't a qualified tip if the recipient had an ownership interest in or was employed by the payer of the tip. The final regs relax this standard somewhat. Under the final regs, an amount isn't a qualified tip if, based on all relevant facts and circumstances, the amount is a recharacterization of wages or payment for goods or services for the purpose of claiming the deduction. Facts and circumstances that might indicate that wages, payment for services, or other income have been recharacterized as tips in order to claim the deduction include when the invoice charge for services is less than the payment from the payer shown on a related receipt, and the amount of the cash tip reported on the receipt approximates the difference between the invoice charge and the payment amount on the receipt, and a significant shift in historical tipping or payment practices between the payer and the tip recipient occurs. Moreover, the final regs establish an irrebuttable presumption that a tip reflects a recharacterization of wages, payment for services, or other income when the employer is the payer of a cash tip received by the employee. The presumption also is triggered if the tip recipient has a direct ownership interest in the tip payer. Questions? If you receive tips for work you perform, check the list of occupations eligible for the deduction and plan accordingly. If you have any questions about this tax break, contact us. We can help you determine if the tips you receive qualify for the deduction.